Well, hello, everybody. Hi, Paul.
Hey, how you doing, AJ?
Good. We're here for another one of these episodes where we're going to be
Excellent. Can't
looking at
wait,
some of,
actually.
yeah, yeah. So we've got a whole bunch of new candidates that we're interested in, given the market's turn since the last time we spoke. So you want to jump right into it, or do you have anything you want to open with?
Okay, what I want to open with a stock that we looked at last time, and we discussed the reason why to have a starting point and not buy at the lows. And this is a great example on FR. That now the Elliott Wave 4 is looking like it's actually failing. So we could look at a short option here because there's the best will in the world. We all want things to go up, but in reality, they come down, and sometimes they come down with a thud. So the reason why I'm looking at the wave 4 failure is that we didn't get through that resistance zone that we discussed last month, and we didn't get through that start point 6303 that I mentioned. It actually broke the stop for the order. It's now trying to get down below the 89 EMA cloud, and I've got a 5-star ex-Brad algo signal for a short as well. So we've got a lot of fresh air below, and we've got earnings coming up tomorrow. So this could be a fantastic earnings play here. Even if it gaps up, fine, we've lost nothing. But we'll be looking at for me in particular, I'll be looking for a short probably just below $58. Yeah,
Yeah.
that would be my entry. Below all of this support, we've got a 5-star sell signal here because I'm shorting this with CFDs. I've got to place a stop, and that's at 61.58 above this pivot. And then I'm just going to put a quick risk reward on there to the next support zone, which I did previously while we were waiting. So we've got a risk to reward of 1 to 1.6. So that when you talk about profit factors, that's a 1.6 into that support zone. That's really is what you're looking for minimum, with a target of around about $53 ish. And
Yeah.
when we look left, this is quite strong support here. We had a major dip, which was a wave 4 at that stage, and then we had a big bullish move. But right now on this wave 4, we've had an ABC correction. The 535 oscillators just smashed through our 90 to 140. So now it's looking like it wants to go down. The catalyst could be earnings for this 9th of February. So we are looking for that short. So, I know you probably haven't prepared this, but are there anything on FR that we could look for as a short play here for an earnings play?
Well, I gotta say, FR was the one that we've reviewed in the past where there just was not any liquidity in the options chain. And there's no
Okay.
liquidity. Doesn't look like there's any liquidity when I click on over to the option chain. There's very little liquidity on the put side as well as on the call side. So if I was to do any sort of shorting, I'd be shorting the underlying symbol. I'd be shorting the stock on this one. But I see
Yeah.
exactly what you're talking about, and I'd follow it from 58 down to 53 in a heartbeat.
Yeah, absolutely. 50, I think a 57.96 entry short. So you're going to have a stop limit order on this if you're trading this with physical stops. So you want to be telling the broker if this stock breaks through 57.96 plus or minus $8.08, you want to go short. So you don't do stock market because we've got earnings, and if earnings is poor and it gaps down, if you've got a stock market on, it'll, even if it gaps down to $56, it'll take you into the short.
That's
So you
correct.
need a stop limit order to go short. This is very, very important. It could gap down to 54, take you in the short, and then come and close the gap, and you'll be in a big loss. So it's very, very important to get the order type here for this short, and you're really looking for the earnings as the catalyst. Now, if it gaps up, fine. I've cancelled the longs. I'm not really interested because this has been a very complex correction here, and I'm not interested in a long. I'm only interested in the short, and I've got a start point, and that's 57.96.
Yep.
So just quickly go through this. We've got a couple open still. We've got a few open still. MGY, it's what I call a slow boat to China. Again, I think it will need earnings to really get this going. It's still in the channel. It's still moving up slowly. VET, I mean, this thing just keeps printing money right now. So remember, our entry was at 10.17, is at 15.35 now. So this is a huge move. If anybody's still in the VET, I would probably be looking to trail this stop below this pivot here at this point, around about 13.32. Or in fact, I use my manager, which is my trade management brain anyway, into an indicator. That ribbon is still green, and it shows you that this current pullback is lower than average volume. The blue dots are underneath, and the candles are cyan. So the down candles, but each candle has less volume than the previous candle. So this is what we would say running out of juice, and not to panic and take your profit right now.
And can I just jump in here? If you used the leverage call option we were talking about, two things to say there. First of all, the leverage call option would be paying something like 3-1 on the underlying symbols. That's great. But the other thing is this past our target for wanting to sell premium against it. So what we're looking for here, and we could use Paul's signals, is we're looking for an opportunity to just sell that leveraged call, and that take the money and run and move on to something else.
Okay, cool. We've had a question from Vic on my YouTube channel. What bid-ask spread differential do you use for your options trades?
So that's getting into the conversation of liquidity. So what we usually look for is a percentage of the going price, but a rough number would be I don't want to get any bigger than about 25 to 30 cents. And when I get bigger than 25 to 30 cents, it oftentimes means I'm the only player in the game. Or I'm the only one, I'm one of a few. And so when I go to buy and sell, there's not going to be anybody else, chomping at the bit.
I think AJ's just frozen. So I'm going to continue. When AJ comes back, we'll look at that. What I'm going to look for is just go through quickly. IGT, we're still in this one. It's tested. It didn't quite break that previous support, so we're still in this trade. GSK, GlaxoSmithKline, another massive trade for us, really. We got him really low here. So we just, again, with GSK, we're in great profit here, AJ. Are you back?
Yes.
Okay. Do you want to finish off with the bid-ask spread differential?
No, I think I covered everything that I meant to cover.
Okay.
We want to make sure that there's buyers and sellers out there if we're going to get into the options play. Otherwise, you'll miss your timing.
Yeah. If in doubt, stay out.
Yep.
So again, GSK, we're massive into this one. We're down at $39 to get in there. We're at 45 right now. Anything we're looking at there, AJ, as far as the options plays that we did? I mean, this was back in November.
Yeah. No, in this one, I'm not. I haven't decided that it's totally overbought, which is telling me that if I get a little bit of a pullback, a little bit of a range contraction is what I would call it, this would be a great opportunity to sell a near-term at-the-money option, and that would create kind of a little bit of a payback, a reduce of our break-even price, and it would absorb that pullback. And then when it starts heading back up, because this has a lot of momentum to the top direction. So I would, any pullback at this point, it isn't so overbought that I would think about just liquidating it. I would want to ride this for a little bit longer. So every time it pulls back, sell a near term at the money option, put that strike price up at a dream price above, so that if it does get exercised, you're happy with that movement as well. But otherwise, just collect a little bit of premium every month against it.
Yeah, and we've got earnings tomorrow as well. Last three earnings were very good.
Yeah.
So we could expect a lift on earnings tomorrow if previous trends are concerning. We just got a major resistance zone at 48. I'll just quickly looked at the weekly there, and that if it breaks 48, that would be then our support in the future. So for me, I'm keeping on this one.
Yeah.
Very, very, very
Yeah.
strong.
I like this one a lot. So
Okay, so let's go to the new ones. So I'm using the weekly chart here because the markets aren't phenomenal right now, and I've gone to the weekly because I want to see that weekly support hold. It's pointless going to the daily time frame too much for stocks trade right now. We need to make sure that support has hold on the weekly, and we're starting to move away. So this it's not a sell-off. This correction, this profit taking that's happened this year so far, we want to make sure that's over before we start to load up our portfolio with options trades or stocks trades on the daily time frame. So again, Elliott Wave on this one, really, really good. Just going to quickly measure I know it's correct, but let's do it properly. Make sure that we are there. Highest point of wave 3 is there. So the wave 4 is behaving very, very well on the weekly time frame. We've got a false breakout stochastic denoting that real strong bullish trend of 2021, and then we've pulled back against there and crossed over during this profit taking period, which started around about the beginning of middle of November, and does seem to have found support at the 55 EMA cloud. Freaky, I know, but that's why I use it and developed it, because it's very, very strong. We're in this green zone, so there's an 85% probability we're going to go on and make those new highs around about $800. So this is looking very good. And we've got an earnings call 22nd of February. That might be the catalyst to get us going. So when we're looking at entries, we've got to look left and we've got to look at this shoulder. I want to make sure we're above it. Okay, this tried a few times, failed before it pushed down, it pushed through again. So we want to make sure that we are through there. We've got a very strong regression trend channel. So this profit taking has been extremely orderly. The Pearson's R there is nearly 93%. So that's just been institutions just taking profits, small bits of profit. It's been very, very orderly. There's been no rush to sell. It's just been profit taking. So for me, start point again, we've got a start line here, 585.82, $586 sort of thing, with a target. To me, $800 is pretty pretty good.
the interesting thing with Intuit is how little options activity it has. And I've put Intuit on and off my watch list over the last years, like over the last 15 years, because of that liquidity issue. The underlying symbol patterns are so nice. And now that Intuit has gotten to the price of over 500 US dollars per share, don't forget, when you're trading options, you need to trade lots of 100. So when you see a share price of an in the money option of $70, you're talking about a minimum investment of $7,000 per option contract. And so Intuit and I have a love-hate relationship. I love the underlying symbol patterns, but I hate the option chains. I'd probably be along with you on the underlying symbol trades, and I'd probably pass on options unless I did some sort of adjustment. So I was in with like a long stock position, and then I would, if there was some sort of predictable pullback, I'd probably sell some premium into that. But remember, I'd have to have lots of 100. Everything would have to be lots of 100. So it would require a bigger portfolio to manage the risk correctly.
Yeah, and to me, this is a longer term growth stock for me. So this is where I'm going to buy some more and add to my portfolio. Some
Right.
people say, well, why don't you buy where the lows are? Because I don't know where the lows are, to be honest. I've not got
You
a
never
crystal
know
ball.
until it's in the rear view mirror. Isn't that right?
That's correct. So I want to make sure I've got a starting point. Yes, I'm gonna lose a bit of money. Well, I'm not going to lose some money there, but my average holding position will be affected. But longer term, if this gets to $800,000, it's a sensible move to make sure, because this just could correct. Earnings could come in, and we could take a further, way down. So you just got to be sensible there. So into very, very good for me. Um,
Paul, I have
NVDA.
to, before we go on to Nvidia, I have to say I like that you look at the earnings like 3 or 4 earnings backs. That's something that I do as well. I
Yeah,
like to know historically what has happened each earnings and whether the market, received the news pleasantly or not so pleasantly. And
yeah,
so that's a best practice that I think we should make sure we emphasize. You want to go back. Not only do you want to kind of analyze what's happening in the present, but you also want to go back and look at historically how have the investors received the news of earnings, whether positive or negative, because that little interpretation is going to be something that probably plays through.
yeah. And for me, it's a more of a visual. I don't spend hours going and looking at reports and all that sort of thing,
No.
because that you won't understand them, and it's pointless trying to understand them. What you've got to do is go on the daily time frame. Look where the earnings
Yes,
were. Look what happened. We had a gap up,
absolutely.
and then we that gap up actually was the catalyst then for institutions to take profit, because they
Absolutely.
got to their targets. Previous earnings to that, we gapped up, we moved back down, we continued, we tested that same high as we got the gap up after earnings. We had some profit taken, and then it went again. So what institutional traders are doing is using this gap up on earnings to actually get to a point where they actually start to take some profit. And they're using that catalyst to do that. And it could be the case this time. That's why we've got a start line. This to me, this is why I really look at that shoulder, because this earnings, we gapped up, we hit these highs, and then we sold off, closed the gap. We tried to push through again, and then we sold off a little bit more, some more profit taking. So if we're going to gap up on earnings this time, we want to make sure that we're through that previous zone of danger. And that's very, very important, because if things have happened in the past, that behavior can be repeated again. So we
Absolutely.
need to make sure that we're through that danger.
And Vic is asking a question, a very good question about going with iron condors or butterflies and whether we neutralize those during earnings. Absolutely. The scoop is iron condors and butterflies, double butterflies. Those are strategies where so long as you stay in a nice sideways pattern, you're going to profit. Earnings is the crapshoot. And again, you can go back if you have a relationship with a symbol that you've been watching. I wouldn't even say for quarters, but I'm talking about years or even, decades, and you're comfortable. But otherwise, you want to go ahead and neutralize those positions, because more than likely what happens during earnings is there's going to be a movement up or down, not staying sideways. Something's going to happen. So when in doubt, the best adjustment is actually to take positions off the table, not to add more positions.
Okay, cool.
Yep.
Thank you, Vic. I've known Vic for a long time.
Very good. Very good.
He's had our Elliott Wave indicator suite probably for 5 or 6 years now. He's a great trader.
Fantastic.
Okay, so we're going to Nvidia next. I'm all about chip sector at the moment, because they've had great pullbacks. So you got to really think about those, that they're all behaving the same. So Nvidia's next. we're just inside for really where we want to be on that behavior. But again, look how we've come back. We've tested this amber zone. We're in the green zone, really. 55 EMA clouds tested. The Elliott Wave oscillator's good. Stochastic's pretty good. We've got a great regression trend channel there of 91.4%. So we can be quite aggressive with that entry. And again, we've got earnings coming up on Valentine's Day. So, you know, this is something again where yes, I'm not all tech, but I do hold certain amount of you know, chip sector type stocks, and when one moves, they all move, and they've all had this pullback now. So we need to really understand and get in what we can. So yes, Into was probably not a great options play. Hopefully Nvidia is, but mainly one of the reasons why I wanted to look at both of those today is because they're both in the same sector and they both behave the same way. So you know, look at that. AMD is pretty similar. I mean, I've just got some more AMD. So very, very similar. So for me, start point here is $260. With a target of around $400. So there's a lot of movement in this over the next couple of years if we can break up through here, and earnings will be that catalyst.
So looking at the options chain, this is going to be a position that we want to have for a while. So a couple of things. If you're thinking about using a leveraged option, we need to not have this thing expire tomorrow. So one of the things we want to think about is perhaps using some of our leaps going all the way out to maybe January 2023 or even 2024. And then the other thing that we want to do is we kind of want to minimize or optimize our position so that it has very little influence from theta decay as we get closer to expiration. That's the time component of an option wasting away. And even implied volatility moves, because Nvidia does have a lot of folks buying and selling and buying hedges, and it creates implied volatility moves. So one little trick that I do when you're taking a look at the option chain is I'll pull up, usually you can pull up different columns. I'll pull up the extrinsic value column, and I'll pull up the mark column, and I'll do a simple ratio of extrinsic value to mark. And that's giving me an idea of how close I am to trading at parity. And anything less than 5% will tell me that, hey, I've got mostly a option that's moving one-to-one with the underlying symbol. And to come back to that question of liquidity, so after I found that particular option, I want to make sure that it's liquid. A good way that I can do that is I can actually capture, for instance, and I'm just going to pick one out of the blue, capture the ticker symbol, and then I'll come back over to the main chart, and I'll compare those two on the same chart. So I'll go ahead and look at that symbol that I just captured. Let me get rid of this extra point. There we go. And I'll take a look. And so what you're going to get is to see sort of trading of that particular option. I see no trading, right? You see very little movement of that underlying. And one more thing I have to do. I think I skipped one step. I have to show the study. Let's try that. There we go. I still have very little activity going on. So that tells me that that particular option isn't traded as much as it should be. I'm going to try one more time just to make sure that I've got everything.
You might have to click apply, maybe.
I think I'm good, actually. I do believe that there's just this particular, and I picked an option that was so deep in the money, it had very little activity. I was looking at the volume numbers, but those are the type of options that I probably don't want to get involved with, because if I were to go and buy and sell on that particular symbol, there won't be anybody on the other side of the equation. But that's just a rule of thumb. I think Nvidia, we could find some symbols, some call options that we could trade here, And even more, like we said, this is a long-term play. So whether I trade the underlying symbol or some deep in the money back month calls, as soon as I get any sort of pullback, instead of, abandoning ship and immediately selling, what I might want to do is make an adjustment trade, go ahead and sell some front month near term at the money calls and just take advantage of that quick little pullback. Even if that pullback is as big as this, you'll see that it pays off big.
Okay. So I've picked some tough ones today, haven't I?
Yeah, but that's okay.
It's not always easy. I think Vic's asked if you ever day traded credit spreads when DT is 2 to 8 days.
I have to say that I have done that. I don't do that anymore, Vic, just because I can make more consistent income not being in front of my computer like that.
Yeah.
I wind up, getting caught up in the buying and selling of things, and it's almost like I'm in Las Vegas. So I actually, if and this is for anybody who's paying attention, we've got a little workshop at Trading Trainer you can participate in, no cost to you. Um, and that workshop shows you how I trade more on the daily and weekly range rather than on a intraday. But it's possible, and it's something you should definitely do. Trading naked in IRAs is not just you. I think a lot of folks, in fact, I don't think I know any broker that'll allow you to do any sort of uncovered positions in your IRA.
Okay. So we're looking at Team next. Another one that I'm looking at after a great wave four, to be honest. Found support in the amber zone and also at previous sort of support resistance zones as well. This time the non-linear support is 89 EMA cloud, stochastic's good, the Elliott Wave oscillator's good. We're a little shy on the we're 90%, so we're just okay on the regression trend channel. But again, I've got to look left. I've got to identify this potential shoulder. I mean, that was what we could call a bullish pennant, a bullish flag. But it did halt there. It caused some issues for a few weeks. So I want to make sure we're above that to get in on team. Great target here, about 550. We've got an entry at 354. So there's a lot of room on this one. We've got a sensible stop below at around about $270. Earnings for this, we've just had it. The earnings catalyst there was that this candle here to cause that wave four pivot. So earnings really sent us up from that support. All we're doing now is consolidating and probably forming another one of those bullish pennants. We want to make sure we break out of that. So 354, above 354 would be our start line for this long trade on team. Over to you, AJ.
Yeah, same thing as the others. This is a long-term position. This is a position I'd want to be in for more than, say, a couple months. And so I think that I want to be using my leaps. I want to leg into a diagonal here. So I want to get myself a back month option. And you can see here, I went ahead and picked a back month option, and you can see the amount of trading. And what's fun to watch when you see the trading is how close, if I was to switch this to a line on close chart, how close does the option pricing match, the shape of the underlying symbol? As I have more extrinsic value in the option, this agreement is going to be less and less and less. But I want a back month option that's going to be as close as possible to the movement of the underlying symbol. And so that's where my selection would be. But again, this is just like the other two symbols. Remember, you have to buy everything in lots of 100. You have to manage your risk. So analyze, now that you've got a leveraged position, if you were to have a pullback to a stop, what would be the loss of the trade understand how much you want to have a loss in your portfolio, have that set in the first place. And that would help you determine how much of your portfolio you would put into this position. And remember, with this price symbol, you might find out, unless you've got a portfolio close to $100,000 or more, you might be priced out of this position.
Okay, cool. I'll pick some tough ones this week, guys, but I've got to stick to what I do. And, at this time, that support seems to be tentative. So we've got to look at the stocks that have pulled back on that weeklies and looking for those. So it's not an easy time. But now we're going to go through a couple more. We're going to go look at Marvel on the daily now. Let's just pull that back. Got to re-isolate all of this now. So just bear with me. A nice double bottom there, actually. Let's just go 45253. Oh, maybe I was looking for this on the weekly as well. Let me just check that one more. 5352. Maybe.
I have to tell you, Paul, Marvel is on our full-time option trader. One of the programs I have is our full-time options trader program. And Marvel's been on our watch list as well. So I'm glad to see that you're featuring it today.
Okay, so I think it was the weekly. I must have been mistaken. Of course it was. Look at that. Perfect. I think with this, we've got $104 sort of target here. Entry is going to be difficult. The wave 4 has pulled back and found great support in the 55 EMA cloud, but I haven't crossed over. This is why I wanted to choose it, because not everything meets your criteria. So in this particular case, the wave 4's pulled back. We've had an orderly pullback. It's been overarching a little bit. So we went flat. So we've got what we call a cluster here at these highs, which is, that's a very strong resistance. So when we look at this clustering here and we look at that resistance that's formed, that fifth wave target zone becomes more difficult. Okay, becomes more difficult. So we have to readjust our thinking. Look at the middle of this zone where 1, 2, 3, 4, 5 weeks, and eventually the market just gave up. So this could happen again. So what we have to do here is we've got the start of a reasonably good trade. And when we look at a risk to reward here, I'm going to put this on, then go down to a lower time frame. Risk to reward with an entry around about just above there. We're only 1-to-1, so this is where options really going to come in here. So we're going to have to go down something like to the 4-hour. So with a 4-hour, I have got a crab pattern completed in the automated completion zone. So this looks strong, and with my divergence cloud here, this green arrow, we're looking good for a long. Just going to put an EMA cloud on there just to be sure. Right, okay. There's my 34 EMA. I usually, when we talked about those EMA clouds on that daily and week, I use 55 and 89. When I'm intraday, I'm looking at 34, 21, maybe even 13 if we're really low here. So with the harmonic pattern, you don't need to worry about understanding it. With our harmonic pattern indicator, which is on our expratrading.com website, it automatically fills in, and the D pivot is completed in this completion zone. Now, it's a fat completion zone in this case, not always the case, but it's printed it in green. So we're looking for a resulting long trade. We already looked on that higher time frame for the weekly to give us a bit of confidence here that, Elliott Wave's been pretty good. It's not met all the rules, but let's go down the time frames. Harmonic patterns, very difficult to form. Very, very difficult in stocks. And when it does, and I've got this divergence cloud now giving me confirmation, I need to be looking to get in this. That's, where I'd said on the weekly, around $75, $76, with an initial target when we see this A and C pivot here around about 92. So it's a bit tighter, but using that multiple time frame strategy and using we started with Elliott Wave, but now we've gone to harmonics. It's a different type of market conditions on that intraday, but we've got a good long here, good looking long around about $76. So AJ, what do you say we got on options here?
Now, here we go. We've got something that's more affordable for our options traders when you're starting about, thinking about lots of 100. And Marvel does have quite a lot of liquidity. Now, I'm saying for this one, we probably don't have to go all the way out to the leap, although we can if it's a liquidity question. But this September option is far enough out. Now, there's a really interesting discussion. When you pick an option, you have to realize that options are optimized, and your selection of strike price and your selection of expiration date, as well as option type, call or put, is critical in optimizing what is going to influence its price. If you're looking for an underlying symbol, connection, a one-to-one connection, a trading at parity, you're going to go deep in the money. So oftentimes when I'm legging into a diagonal, that's my back month option. I'm looking to optimize that. When you start optimizing at the money options, now you're bringing in the influences of time passing by, and you're bringing in the influences of what we call implied volatility, the buying and selling pressures of an option. There's this number called implied volatility, and there's a question about implied volatility versus historical volatility. Historical volatility is easy to look at, right? It's the true range or average true range. You just look at a chart and you basically look at how big the bars are. If they're big bars, it's been a volatile session. And historical volatility is what we're looking at when we look out the rear of our car through the rear view mirror. Implied volatility is a number that's actually only calculated if you've got some sort of derivative traded on the underlying symbol, right? Because what implied volatility is if you take an options pricing model and you realize that there's never a connection between the underlying symbol price and the option price, there's always some reason why it's not the same. And the mathematicians finally, threw their hands up as they've been trying to figure out these pricing models, and they said there must be a fudge factor. And so to calculate the implied volatility, what they do is they take the option price that's there, they take the underlying symbol price, they take known things like the number of days to expiration that they can factor out, and what's left is the emotional buying and selling pressure. And we know why there's buying and selling, right? People are using these options or derivatives as hedges. And so when there's a lot of buying, which causes this implied volatility fudge factor to be overpriced, the option is overpriced than what the historical volatility says it should be. That's because investors are fearful. And when the option price shows that it's underpriced, the implied volatility is down, right? That's because investors are confident. They're not buying these hedges. And so that's how the IV is derived. And so a lot of people will compare IV to HV. And so if the option is overpriced, they tend to start selling them. But you have to make sure you're selling optimized options for implied volatility. So you're going 1 to 3 months out, because that's where the implied volatility has its movement and where Vega is big enough to actually have an influence price. If you're talking about options like a back month option that's a year out, the IV isn't really going to affect that option. And if you're talking about near-term options, your theta decay is going to overwhelm any sort of IV motion. So if you're trading implied volatility, then you're thinking 1 to 3 months out. With that all said, on this particular symbol for Marvel, my thoughts would be, let's use some sort of option that's optimized. So I want to go deeper in the money, optimized for the underlying symbol price so we can capture what Paul has identified. And then again, we'll set a target. We'll set a target exactly where Paul's thinking that that would be a good exit price. If it falls short of that target, instead of liquidating the symbol, we'll go ahead and sell some front month at the money options that are near term. So not optimized for IV movements, but instead optimized for that 3 weeks of time decay. And that would help us reduce our break-even price and still allow the symbol to come back and rally to that point that Paul identified. If it goes past that point that Paul identified, forget the premium selling. Let's just look for a great opportunity to sell that back month option.
Okay, cool. It's actually getting pretty close. This could trigger today.
Yeah.
We've got the indexes really pushing high right now. So this really could go today. Right, the last one I'm looking at this at a time frame that not many people use or really understand. So a trading day with stocks has a certain amount of minutes. You divide those minutes equally and look at the 195-minute chart. It is phenomenal as an intraday chart. Sometimes that 4-hour chart could be just too big because there's only 2 of those. Well, not exactly 2 in a day. So we got to consider smaller time frames. So I look at the 78-minute, the 39-minute, and the 195. And I've done this for a long, long time. Now, what we're looking for here is when I look at these sort of time frames, when I'm looking with the expert algo, I'm looking, is it in the groove? So does it follow that roller coaster? I mean, a range can be sideways, but a range can be also up as well. And Costco is a very strong growth stock in a tight ascending range. So what we look for here is we look for these 6-star expert buys and 4, 5, 6-star expert sells. Okay, so when we and then all of a sudden now we've got a 5 and a 6-star expert buy. So we've got some great opportunity here because this particular stock is in the groove with the expert algo. So we've got to look at these highs as our target. It's sensible. We've got to look at an entry above this recent pivot here around about 527.53. Let's turn that to green for go. Now with this, we have 5 and a 6-star buy. Let me just make sure I've got the right. You've got the EMA cloud on the 34 here. So really, I've got to go aggressive with this stock. This is the 6-star buy candle. This is the 5-star signal candle. My 34 EMA is just above the low of that 5-star. I'm going to look at this as a really tight stop here. Okay, really tight stop around 504.10. If it breaks this 34 EMA cloud, it could really come down. My manager ribbons turn green. So risk to reward, we're looking at around about 1 to 1.6. So this now gives me a little bit of comfort. Actually, I'm going to go below that 5-star signal candle at 501.93. I'm going to adjust my risk to reward. Now I've got a little bit of breathing space underneath that 34 EMA cloud. I'm below the low of that 5-star expert algo signal. I've got a sensible entry, which it could actually go in today, and with a $570 target. So this is a good looking trade on Costco. Over to you, AJ.
Would we consider, with what you're seeing, would we consider that the level at about $480 is a pretty heavy level of support?
480.
Yeah, down where.
Yeah. This zone here, when we look at it on a daily, is actually a wave 4 pullback.
Okay. And then
so
you've also identified.
If you look at a daily, that's been an orderly profit-taking pullback, and that this is perfect. It's great support now.
And then you're talking roughly about 565 or something like that as our
Yeah,
top. You
yeah,
know what
yeah.
I would actually, this is an interesting, this is where we are right now. I would take my time.
Oh, I think we've lost AJ there again. Just going to give a couple of seconds, see if he comes back. Okay, I'm going to continue before we go while we get AJ back. So again, with the expert algo, we have to make sure we're in the groove. We've got to see, when these. Oh, we're back. We're back, AJ. Okay, go ahead.
Yeah, I apologize. I don't know why my stream keeps dropping, but what I would say is I would take a moment today, since I'm somewhat between those two levels, and I would analyze what would be my risk to reward on simply doing a very simple options trade. And with that options trade, I could then create some price targets for the options themselves and then go back and leg into it. So as I hit that top that you're talking about, I would consider perhaps shorting some symbol. And then as I come to the bottom, I would sell some near-term puts and just allow this sideways movement of Costco that's developing to create an ongoing income stream for me. So a
Okay.
little different look at it than just trying to trade the current move.
I mean, I've been in Costco since. Let me have a quick look.
I mean, the scoop is it's been on our full-time options trader watch list as well for over a decade.
Yeah, I mean, I've been in Costco. My first price was at $219.
I was going to say, yeah, we've been watching it since it's been in the hundreds. Yep.
Yeah. So it's just something you can keep adding to. I mean, to be honest, a quick intraday trade, we're clear of earnings. We've had dividends. This is just pure price action and volume now. It's a strong growth stock, so it's just worth adding. For me, um,
And looking at
my
I look
positions are quite low. So adding now to a blend portfolio of just physical stock would actually sort of really, I would say, I've got confidence this will keep going. But for me now, I'm so much in profit. I wouldn't, the averaging price would really change. So if it was options, it's easier. Or for me, trading CFDs, I'm looking for a quick trade over probably a week to get to 570, and I'll take that money and I'll
mm-hmm.
invest it in another stock where it's closer to my average holding position. Because right
Yes.
now, I'm in thousands of percent in profit, but to take more positions at this price just really sort of dilutes my holdings. So I still need to trade it. I've got confidence in it, but I'm not an options trader, so I'll use CFDs. But the good thing here is you can make that money, and you can make the money going down as well.
Yeah.
And you could use, there's 8,000 stocks out there. There's other stocks that we talked about today. If you made a couple of $1,000 on this stock, and Nvidia or Intu was still available, buy a few shares of that,
Yeah.
and give that a go. You've got to keep reasonably diversified to make sure that overall wealth is generated. You can't just put everything into one particular strategy, or a set number of stocks. My blend portfolio has reduced. How many stocks have I got in now? 1, 2, 41. We're 35 stocks in that blend investment portfolio now. It has reduced. I got rid of all my ETFs last year. So I divested and took a load of profit in ETFs, purely because the rules have changed for where
Yes.
my holdings are, and what the UK. Although I live in Spain, my big SIP pension is in the UK. they deem ETFs as high risk.
Hmm.
So you're not allowed to hold them in your pension plan. So I had no choice, but luckily, since 2013, I've been in a lot of these ETFs, and it made a big payday for me. But now that's reduced, I've got to look for other stocks to get into that
Right.
portfolio. And there's some fantastic opportunities that we discussed today with Nvidia, Team. We've already got the GSK, the VET. You know, there's a lot out there that are primed and ready to go right now.
Paul, pull back up your Costco, because we're
Yeah.
using different indicators, it looks like, than what we've used before. And you said, I know I use the 39-minute chart often, but what were the other two charts you mentioned?
So 39, 78, and 195.
78 and 195. And then
Yeah.
these clouds that we're looking at are different than the clouds we've had on other charts. Can you tell me more about those?
Okay. So the dark red one is that there's the EMA cloud that you've seen on the other charts, but because we're
Okay.
intraday, we have that on 34. Okay.
Ah, okay.
Yeah, so it's just a different color. I'm a bit anal about that. Different colors for different EMAs.
No, it's good. Good. In this
Yeah.
case, anal is good.
So what we also have there, if I just take the EMA cloud off a second, we have what's called the manager. So it's
Okay.
my trade management brain. So it looks at volume candle to candle. It looks at
Okay.
average volume, and it also looks at price action. So we look at this. See now the ribbon's turned green.
Hmm.
The ribbon was red during this bearish trade, and we'd be getting out when it turns green. I want to look at this previous long trade here, because this is very important for me. Is that I look at pullbacks, but I look at the behavior of those pullbacks, so I don't panic. So what I've tried to do, and I've got a very clever guy that actually put this visually for me, is we see the dots above the candles. That's higher than average volume, and it's
Okay.
automatic. It looks back. When we look at these they're lower than average volume, but
Okay.
also we color the candles. So we've got two ways to manage this trade. We can have the manager, as long as the ribbon stays green, you stay in the trade. Simple as that. You can be more aggressive with that, though, if we had, for example, we had a red candle here, which is a distribution candle.
Hmm.
A cyan candle is a down candle, but it has less volume than the previous candle. Okay, so we don't really take too much notice of that.
Right.
But when we get a distribution, we're distributing more shares. We're selling more shares. There's more
Right.
sellers on that particular candle.
Where volume
That
is
was
the
a
great
one.
validator. Right.
Yeah, that was a one candle wonder. If I had another red candle higher than average volume, I would have gotten out. Okay. But look, the manager said stay in. We went lower than average volume. We went sideways, and then we pushed up again. Now you see here, we have a cyan candle higher than average volume. We have a red candle higher than average volume. And then we have this candle here, red candle higher than average volume. That's your aggressive exit
Exit.
strategy. So for me, before all of this was made, I had lots of things on my charts to measure that average volume for each candle, whether it's I had to look at the volume to see on the the sub chart. Now it's there and it's visual, so it actually helps you manage the trade.
Hmm.
Even when you're going short, here, look, okay, we have one green candle, which is an accumulation candle. So there's more buyers, okay, and it's higher than average volume. One candle wonder again, until we finally, this time, the cloud the ribbon turns green. Time to
Hmm.
take off your short. Then we've got these expert algos. So what we developed is with the expert algo signals and then the manager, we call it cradle to grave.
Okay.
So the cradle is the expert algo giving you the signal, and the grave is the manager managing the trade to maximize the profits. It's important to maximize your profits and not panic on pullbacks. Some pullbacks will continue like this one, and you take your profit out. Some like this one, run out of juice. You need to be visually understanding what that behavior
Is
is, not have a panic.
happening. Right.
And, if you panic too early, you got out at $501 instead of, $537. That's a
And
that's a big difference. And
that's a
if you're doing that every trade,
huge,
if you're
big
doing that every
difference.
single trade, you're missing out.
You're
You're
leaving so much money on the table.
Yeah. So the cradle to grave really is what we have with the expert algo. Now, it works, whether you're swing trading on the daily time frame or the weekly, but really is on these 195 to 78s to 39s. You will see when a stock's in the groove, it's in the groove, and we are able to pick those out with those expert algos, and then obviously there, and obviously if you're options trading, these are just signals and way to manage those. The reason why me and AJ have got together is that I can pick signals out every single day, and I retired 7 years ago from trading large accounts because for now with options trading though, it's difficult for me, and I'm not going to learn it. I don't need to learn it, but I can give you those signals. But AJ can really help you understand what types of options to take with those signals.
Yeah.
And that is very, very important.
Yeah, what I tell folks that come to me, I say, listen, there's a whole piece of pattern recognition that you have to have down to some degree, depending on what you're trading. And then we can pile on the optimization of options. You can, take your investment vehicle and take the different patterns you've identified and pick that right option that'll just hum. And so, Paul, you can, if we go to that link for global trading software, we'll be able to learn about these indicators.
That's the Elliott Wave. Yes, we have basically what we talked about there. Obviously for Think or Swim, you use Think or Swim a lot, but for TradingView, MetaTrader, everything like that, we have a lot of indicators there. So
awesome.
globaltradingsoftware.com, you go and choose your particular
platform.
Yeah, go to the, we talked about Cradle to Grave bundle there. That's available for TradeStation, Thinkorswim, NinjaTrader, TradingView, Motive Wave. And that bundle gives you that signal and gives you that management. And maybe we start to think about what AJ does and start to put it on global trading software as a package to help those traders with with options plays, because we can give signals and we can manage those trades very, very well.
And then if anybody's speaking of, that whole piece of utilization with options, if you want a quick primer, when I say quick, it's roughly about an hour long. If you'd like to come and sit through a quick primer on options and the different selections, I've got a workshop that plays that, I can come in there live if there's questions being asked, but otherwise it just plays. And it gives you, and I always load it every month. I load it with new examples. So even if you've watched the workshop, you may want to check it again for new examples. So if you go to that link, check out the workshop. And then, of course, if you want to participate in any of our workshops, there's a way at the end of the workshop to do that. But the primer is there. And what do you think, Paul? What do you got for some closing remarks?
I would just err on the side of caution right now. Everything looks as though it's going to bounce, but just make sure you've got those start lines. Use stop limit orders. Do not just say, right, it's near the lows, I'm going to buy now. Even when you're trading options, I think really, join AJ's workshop, because obviously there's going to be more people in there that are trading options as well. But don't be in too much of a rush. Make sure we're over the start line, so you can sort of optimize those particular signals. Don't be in a too rush to lose money.
That's absolutely right, because with options, a lot of people think that options can salvage a bad trade. Options will only aggravate a bad trade if you don't have your signals and your timing right in the first place, options could either be the best thing that's ever happened to you or the worst thing that's ever happened to you. So it's so important that you get a grasp on that. That you know, take the primer is what I'm saying, and also
Yeah.
realize that it's so important to not just use a black and white approach to everything, but if you trend data on whether it's a symbol or if you're doing a broad market analysis on the index, watch the data over time. In fact, take a look at spreadsheets. I just presented a tool to my folks in my full-time trader program last night that helps them identify if this is a big personality change of the market or not. And it's all based on actually watching the data and not just guessing at chart patterns. So that, feeds perfectly into what Paul's been offering us today, because that's what his indicators do. They incorporate a lot of like almost artificial intelligence that helps us understand with the data where things are happening. Don't just guess at candle patterns, right? It's important to really use the data,
Yeah. I don't think I'll wear a white shirt next month. It's reflecting quite a bit.
I get a reflection on my glasses, but I need them to see. So,
Same here. Same here. So we had another great session today, AJ.
yeah, I can't wait. What are we going to do this next month again? Maybe in March?
I think so. I think I'm off to Dubai, but I'm not off to until the end, middle to the end of March. So yeah, we'll look at the beginning of March, definitely.
So everybody on the line, please stay tuned for about 3 or 4 weeks from now. We'll announce another one of these collaborations between Paul and I. Paul with his master signal observations and identifications, me with being able to utilize the trades even a little bit more flexible with the options. It's a marriage that's fantastic, a partnership. And, take some of our focus on Intuit, Nvidia, Atlassian, Marvel, Costco, and as well those candidates that we presented in the previous sessions. We're going to pull them all together, keep track of them as we go. It's been good having a nice call with you, Paul.
Thank you, AJ. I've had a really great time again. Time for my
Thanks.
dinner.
Yeah. Take care, man.
You too. Bye bye.